So in this video, I'll talk to Tony Gimple, who's the co-founder of Less Tax For Landlords. This video is brought to you in part by Property Summits, the first property event of its kind. Property Summits is an all-day event which brings together some of the most respected and experienced names in the property industry. To download a brochure and to find out when the next event will be held, please click the link in the description below. Hi, I'm Andy from Monopoly.com, and on this channel I share my experience as a property investor and landlord, and also interview other investors so we can learn from their advice too. So if you're new here, consider subscribing for more videos like this. So Tony, a lot of people that watch my channel are either considering investing in a buy-to-let, or they may have one or two properties and they're looking to expand. What advice would you have? In fact, should we break it down into two parts? What advice would you have for someone who's considering investing in a buy-to-let, but is kind of put off by the word tax?
Right, don't let the tax tail wag the planning dog. You only pay tax if you make a profit, and it's absolutely important that we pay our way in society. Taxes keeps the lights on, it pays for social services, it allows you to drive your car, it maintains the roads. So paying the correct amount of tax is absolutely critical, otherwise you won't get the opportunities to be in buy-to-let in the first place. But the key question they have to ask themselves is, why are they looking to go into property? Is it a hobby? Is it they just happen to have a spare property, they've inherited one, they've got married, the wife, husband, whatever, had their own home? Or are they looking to build a long-term professional property business?
Yeah, so there's two reasons mainly, isn't there, I think. Either people fall into it as an accidental landlord like I did, and I would say they're less likely to be put off because for whatever reason, they want to stay on the property market, they don't want their property to be empty, so they let it. And then you've got those that are actively seeking to be an investor, and I'm guessing they are the people who will look into it more deeply and maybe be put off by the tax. But what you're saying is absolutely right, isn't it? If you're not making a profit,
don't pay tax.
You're not going to pay in tax. But is there a caveat with Section 24 to that?
Okay, Section 24, which is the capping of the amount you can offset of your mortgage interest against profit effectively, which is now capped at 20%.
Right. So
it doesn't matter if you're a high rate taxpayer or if you're an advanced rate taxpayer, or falling into that horrible trap. Once you earn over 100,000, the next 25 or so is effectively taxed at 60% because you lose all your allowances. The maximum you can offset is 20%, and you now get a tax credit, which is a wholly different beast. So it effectively means you're being taxed on turnover. It's a very clever rule, I have to say. Just by changing the way they do the calc, they make shed loads of money. But you have to look at property not as an investment, as a business. And if your sole motivation is to seek ways of reducing your tax bill and then spending the money on holidays or whatever, you're never going to succeed. It has to be run as a business. And businesses are allowed to reduce their costs, and tax is a legitimate cost if it's done in the right way. But if you're not careful, if you're already a high rate taxpayer, then Section 24, but it's only taking into account payments of tax on account, can cause all sorts of problems later on, and you'll run out of money purely for cash flow.
So for someone who's paying the high rate of tax through their employment, what advice would you have for them?
Okay, once they've decided that they do want to go into property, and that it is the market for them and for the right reasons, then they actually start to need to seek joined up advice. It's not about just tax, it's accountancy, it's tax, it's succession planning, it's business planning, it's risk management, it's getting the right mortgage on the right terms, and looking for the whole life of what you're doing. If that's done correctly, and you are motivated to grow your business, then the way to do it is almost certainly with something called a mixed partnership. And that's a combination of a natural person, you and I say, an artificial person, you become a designated member in a limited liability partnership, and having a limited company, which is also part of that limited liability partnership, all working in conjunction, will allow you to take out pretty much as you like from that property business. and never pay more than basic rate of tax on those profits, regardless of how much you're earning elsewhere, if it's done for the right reasons.
Right. My eyes kind of glazed over. I'm not sure if I got all that in.
It's quite a complex subject.
Yeah. And of course, tax is such an individual thing, isn't it? It's different for everybody. Whether they're single, they're married, what they earn, what other assets they've got bringing income in.
And they have to look at it in the round.
Yeah.
You can't just look at it, employed income here, property income there, investment income somewhere else. You have to look at the entire picture.
Right.
Because the whole tax system is effectively joined up. So if you go to somebody who's not experienced in the space, who's not a specialist, you will end up paying far more than you need to. So whether you're employed, whether you're self-employed and or have property or any other businesses, you have to look at it with specialists in the round to work out what it is you're trying to achieve.
Okay. And that's where your company steps in.
Yeah.
So you assist investors with paying the tax they need to pay, but without paying what they don't need to pay.
Correct. HMRC wants you to pay the correct amount of tax.
Yeah.
We help them work out what is the correct amount of tax in their circumstances and how they can grow their business by making the tax system work to their advantage as well as the country's.
Yeah.
So it's not about how much you pay, it's how much value you get from it. And you are allowed to mitigate the amount of tax you pay, from income tax to capital gains tax to inheritance tax. But it is a specialist area when it comes to property. And as a firm, the only thing we sell is that which we know and they don't. And our clients pretty soon get fed up with us asking them one key question, which is why? Why do you want to do it? What are you trying to achieve? How do you get to this place in the first place? We never act under their instruction. Our job is to work with them almost as a non-exec advisory board to help them grow their business and to test them, to whisper in their ear, remember, you're only a man. Now, why did you think of this idea in the first place? And once we get to that point, and they know why they're doing what they're doing, bingo, grow the business.
So I just kind of assume that a lot of your customers would already have properties and portfolios, and they'll come to you for advice when completing their self-assessment online.
And by then it can be a bit late. Depends where they are in the tax year. But we have clients who've got no properties, but have recently sold a business and now got capital, which they want to build another business with. So they're literally just starting out. Through to clients who've got hundreds of properties, who some of the advice I've received in the past has been wanting. So it's a complete range. Just about everyone has been an accidental landlord. They've started out with nothing and grown into something. But you have to go to the right people at the right time for the right reasons and accept that you don't know what you don't know. You're great at social media. Maybe a doctor or a lawyer or a hotel owner, whatever, it's immaterial, but you're really good at that. But when it comes to investment property, building, growing and running a professional property business, it's a highly specialist area and you need highly specialist advisors to make it work with you.
Makes sense. Makes complete sense. This is your first time on this channel. Are you ready for the quick fire round?
Yeah, give us the quick fire round. Hit me with your rhythm stickers, Ian. Famously said.
Coffee or tea?
Black Americano strong when I'm out. Tea bag, milk, boiling water when I'm at home.
Oh, you got a good routine there then.
Pretty much, yeah.
What's your favourite snack?
Probably smoked salmon.
Blimey.
Oh, you asked a question. My grandparents used to run a deli.
Oh, right.
So I was brought up on smoked, pickled, preserved, salted, dried. So anything like that, just eat.
I need to hang out with you more often, I think.
That's good for you as well.
Yeah, exactly. Yeah. Last book you read?
Well, I've literally just finished reading again The Dogs of War by Frederick Forsyth. It's of its time, but it's just as relevant in some ways today as it was when it was written. It's just a good read. Good, quick read.
Would you rather have unlimited first-class tickets around the world or be able to eat in any restaurant for free for the rest of your life?
Unlimited first-class tickets around the world.
Yeah, good choice, I think.
Yeah.
So many places you can go and see.
And be comfortable. You get better food, you get more leg room.
Yeah.
So,
Yeah.
Might as well be comfortable.
Yeah. Very true. So before we go, what advice would you have to someone who's considering buying their first investment but is on the fence and is spending a lot of time with researching? What advice would you give them for them to make it happen and start doing something?
Work out why they're doing it.
Okay.
Why are they doing it? Why property?
Yeah.
Tenants and toilets are hard work.
Yeah.
There are easier ways of earning a living. If they've really worked out this is what they want to do, it's not just an experiment, it's not just a hobby, it's a way of making money, building a business, then don't over-mortgage, get it on an interest-only basis, do your research into the right area, don't worry about capital growth, look for income yields. Rent income is good. Capital growth you can't spend.
Yeah, and I think that why is a really good point, because I mean, it even helps if you're in a partnership, if you're married or have a partner that maybe isn't that keen in getting involved, by having a why and explaining to them, here's what we could do, here's what we could achieve, and if maybe we don't achieve that within 2 to 5 years, then you know we could sell and get out of it. But yeah, having that reason why to do it.
Just because you think it's a good idea doesn't mean to say it is.
Yeah.
Do your research, understand why you're doing it, go and take advice, come to networking events, go to the property shows, be it Southampton, Landlord Investment Show, the ones at Excel, talk to people who have read the book, seen the film, ironed the t-shirt and are still gathering the skulls.
Yeah.
Everyone gets it wrong.
Yeah.
There's no perfection in this world.
No.
It's just the way it is.
Yeah.
So once you've done that, that's the time to then seek professional advice and find your first property and have that plan.
Brilliant. Well, thanks so much, Tony.
Right.
If people want to get hold of you, what's the best way that they can reach you?
The best way to reach me is probably by either email or telephone, and that's tony.gimple@lesstaxforlandlords.co.uk or 07974 099 221.
Well, Tony, thanks ever so much for your time. I really appreciated
I
it.
enjoyed it.
And hopefully we'll have you back on the channel again soon.
Fine, very happy if you want to do anything like this, Q&As or webinars, no probs.
Please like and share if you found this video useful, and if you're new here, definitely subscribe so you won't miss any of my future videos, which will all be geared towards helping you start or improve your property investing business. Thank you so much for watching, and I'll see you in the next video.